Hi, Todd VanDenburg here with VanDenburg Capital Management and another Uncommon Sense update. So we're starting to see fourth quarter earnings reports coming in, and we're also seeing at the same time the media start to talk about how 2019 earnings are not going to be as good as 2018, and that's evidence of an economic slowdown. Now, 2018 earnings were an anomaly. They were abnormally high because of the 2017 tax bill that went into became law at the end of 2017. So the fact that earnings may go down in 2019, they're going to go down from 2018, but we expect them to be in line with where they were in 2017. And nobody was really complaining about earnings in 2017, so we're not too worried about 2019. What I do want to talk about today is the fact that we're going to start to see 1099s coming out for people that have brokerage accounts and for other things, but I'm primarily discussing brokerage accounts today. So if you have a brokerage account and it has mutual funds in it, you could be getting a 1099 that's going to show that you had capital gains that you have to pay taxes on. Yet it's also likely that the value of that brokerage account went down in 2018 because of 3 months of intense volatility. So people tend to get these 1099s and get frustrated. Wait a minute, my account value went down and I have to pay capital gains. I didn't have any gains. So here's what happens. In a mutual fund, if a mutual fund manager sells something in the fund throughout the year that they had a gain on, even though the value of the fund goes down, those sales get passed on to the shareholders in the form of capital gains. So the value of the fund goes down because the value of the underlying holdings in the fund went down. But again, if at any point in time throughout the year they sold something and made a gain on it, those gains get passed on to shareholders. Now, when you contrast that with something like an exchange-traded fund, the fund, as it sells things inside the exchange-traded fund, if there's gains to be had, those gains aren't actually passed on to shareholders. Now, I'm not trying to advocate that everyone should use exchange-traded funds versus mutual funds, but there are differences between the two fund types. And it's really important people understand how these things work so that they can make sound choices when it comes to what kind of investments are going to help them achieve their financial goals. But I just wanted to warn people that as you get your 1099s, don't be disappointed and don't feel like anybody did anything wrong or that there's any issues or mistakes. It's just the nature of mutual funds. We here at VanDenburg Capital Management use a lot of exchange-traded funds because they do have certain advantages that we like, especially in brokerage accounts, but not to the exclusion of other types of funds like a mutual fund. So in any case, just be aware 1099s are coming out. If they show gains, don't be upset. It's just the nature of the beast. If you'd like someone to take a look at your portfolio to see, if there's ways that you could optimize your investments to maybe not pay taxes when your balances go down, give us a call. We'd be happy to help. In any case, that was your update. I hope you enjoyed it. If you did, give us a like, give us a share, and I'll be back next week with another Uncommon Sense update. Thanks for watching.